Now, following Mr. Kokinos, we will now proceed to our first panel discussion titled The Future of Fintech Scene. The moderator of the discussion is Mr. Fotis Draganidis, Partner Development Manager for software houses in Greece, Cyprus, and Malta at Microsoft. So during this interesting panel discussion, our esteemed guest and moderator will discuss the future of the fintech scene in Cyprus and abroad. Can Cyprus become a fintech hotspot in the future? Well, the last 15 minutes of our speakers will answer and interact with questions from the audience. So feel free to make your questions. During the discussion, you can also add your questions via the Q&A tab below. And of course, don't forget to share your excitement in social media via #Cyprus Fintech Summit. So our esteemed guest, the stage is yours.
Thank you, Adonia, and dear
Pleasure.
friends, Kalispera. Welcome to the first panel of the first Cyprus Fintech Summit.
Ένα λεπτό for 1 minute for this because I'm adding another panel.
Sure.
For this, I look forward to hearing to your panel. I mean, I do expect to get the reply to this question.
Yes, I think we'll be having a very interesting discussion the next hour around the future of the fintech and what's exciting, what exciting is coming. So, you know, I'm also looking forward to listening to everyone. And also, it was very interesting to listen from the minister about how advanced are things in Cyprus, and very proud to see Cyprus in the top quadrant in the report for EU. I wish Greece follows up.
Well, indeed, as Robin said in the first discussion, we are living in times where technology and digitalization is being accelerated. So I will say, I mean, I've been noticing that Greece is catching up, not just catching up, it's doing quite well as a country. I mean, in the public sector, they're no longer using fax. I mean, they are promoting the local civil parliaments are becoming more autonomous. I mean, it's quite interesting to see that.
Yeah, for sure. We're having leaps, and I'm sure we'll catch up in the next couple of years. So if we are all here and we're ready to start, as you know, I'm Fotis. I've been working for Microsoft for the past 20 years with startups, software houses, and academia. And today it's a great pleasure and honor to be with Andreas, the founder of XValley, Dr. Gege, Gatt, who is the CEO of EBO, Victor, the CEO of Plum, Victoria, who is the founder of Vis Ventures, Andrew, who is the founder of Acuity Trading, and Yiannis, who is the founder of Octopus Capital. So a warm welcome to each one of you, and let me pass the floor to you for a short introduction of yourselves, maybe starting with Victoria.
Thank you, Foti. Hi, everyone. It's good to see some of you again, and then to see some new faces. Thank you, Pani and Andrea, for organizing this. Delighted to be here. I have actually established these ventures as a boutique advisory that works with startups and provides also services to scale-ups and multinationals looking to set up and work out of Cyprus. I have been in international business for 20 years, and the last 4 years I juggle multiple hats and roles that also includes angel investing and advising, mainly in the UK tech startups, providing talent advisory services to scale-ups. And I also have the pleasure of actually representing a group that owns 2 banks in Central and Eastern Europe. So there is that foot in traditional financial services alongside my interest in fintech. Looking forward to this discussion.
Thank you, Victoria. And let me pass now to Andreas, the proud sponsor of the Cyprus Fintech Summit. Andrea.
Thank you for hosting this great panel. I'm Andreas Livadiotis. I'm the CEO and founder of XValley Technologies and the guy behind the idea of organizing the Cyprus Fintech community and making this great event. I think I should allow more time to our great panelists. I have spoke already before.
Thank you, Andrea. Dr. Gege.
Good morning, Fotis. Thank you for having me here. So my name is Gege Gatt. I'm a technology lawyer by profession, but an entrepreneur by trade. I'm the CEO of EBO, which is an artificial intelligence company set up in London and Malta jointly. And we automate the engagement of conversations, particularly in the financial services sector and in the healthcare sector, where in the UK, we have a large amount of deployments, particularly to enable citizens to access public health services. I also work in a think tank in the Vatican in Rome, which has been set up to focus on human flourishing and particularly the moral and ethical implications of the use of artificial intelligence in society.
Thank you, Gege. Hope to meet you in Malta soon.
Sure.
Victor, how about you?
Hello. Yeah, hi. I got confused because there's another person with almost the same name as me. But hi to everyone. I'm Victor. I'm a Cypriot, half Canadian, but I grew up in Cyprus. And I guess after growing up there, I moved to the US where I studied. And my fintech career, I guess I was a trader, then started at TransferWise early on when there was like around 5 people in London and set up TransferWise internationally. Kind of left when there were like around 600 people, now they're around 2,000. But then in the last 4 years, I left and I set up Plum. And the idea behind Plum is that we're helping people effectively have more money and be less stressed about it. And the way we do that is that they connect their bank account to us, and based on the data that we see, we automatically start saving money for them that can earn an interest. Then they can also open an investment account with us so they can start growing their money for the future, because that's growingly important in this environment of no interest, right? But then finally, we also detect all of the bills that they're overpaying on and make sure that they're paying the lowest possible they can. So yeah, all in all, we think we can make people 20% better off over their lifetime with them doing nothing. Yeah, we're a company of around 80 people between London and Greece. We haven't really talked about it, but we'll be opening up an office. We have an office in Cyprus, but we'll be hiring a bit more in Cyprus as well.
That's great, Victor, and impressive work with Plum. Hope to see you soon in Greece. And then we have Andrew Lane. So Andrew,
hello, Fotis. Thanks for having me. My name is Andrew Lane. I'm the CEO of Acuity Trading. My company is based in London with offices in Barcelona and Ukraine as well. I started my career off at the Wall Street Journal, moving from London to Madrid and then ultimately to Barcelona, where I'm based now, living in Barcelona. I left the Wall Street Journal about 7 years ago to start Acuity Trading, and Acuity Trading is a news technology company. And I spent my whole life in news, and we focus on extracting information from text using a science called natural language processing, a type of machine learning. And we put that data that we extract to use in the world of trading and marketing and financial services. Thank you.
Thank you, Andrew. Yiannis, could you let us know
about everyone?
Sure.
Thank you, Andreas and Fotis, being the moderator. And it's a great panel to have the discussion with. And I'm the founder and managing director of Octopus Capital, which was established in 2018 officially, with the unique co-founding model to help through mentorship, team and resources, investment, strategic partnership, and not only also to build bridges with VCs and funding for funding purposes, or prepare to go for crowdfunding platform. Currently, the investment portfolio is around 10 startups in different industries, including maritime, e-commerce, energy, and of course, fintech. Yeah, I'm working extensively in the startup scene at least the last 5 years, and through helping startups to, especially the business part, when they need help and support through different partnerships, bringing in advisory board on board, and also prepare and raise some funds as well. Thank you.
Thank you, Yiannis. So let me jump into the questions. I have compiled a couple of questions for each one of you, and I'll start with Andreas. So Andrea, we see a lot of progress in the fintech area, and we see a lot of finance applications, a lot of fintech startups also getting lots of funding. And actually, we live currently disruption of the traditional financial services. So I'd like your opinion on what you think are the key trends in the fintech world, especially for 2021.
Thank you for this. This is a great question. Fintech in general, fintech applications, it will grow much bigger and much faster. There will be much more demand on online services, digitalization of everything. Like we have seen in the last year, due to COVID, everything is going digital. There will be much more mobile app services, simpler, we hope simpler mobile app services with more complete solutions. There will also be more websites that are not difficult to navigate. You can find the info, they have education, and also like virtual assistants like EBO and automations like Plum. There will be many people doing online investments, making phone calls or going to an office will be a thing of the past. We also think that many normal apps, not financial apps, will add financial services, like WhatsApp is adding payments. They are, of course, copying an ecosystem existing in China for many years, like WeChat. Due to lockdown, we have seen huge spikes in the online services, and we believe this will stabilize with an increase of 20 to 40% on online commerce. And as the minister said, the digital infrastructure will advance. We have seen many advancements in the distributed systems, copying the fintech applications infrastructure everywhere, good, reliable internet to all the areas, remote areas. And this is a good example. Fintech is a good example to be followed everywhere. We also think that there will be a regulation in crypto, in BTC, and that this will help the crypto coins to get more recognition and more wider usage. Also, we think that in all this, the human factor should not be taken out. The human brain, the critical thinking of a human person cannot be replaced with machines and numbers. It has to have the final word in important decisions. Thank you.
Great to see, Andreas, that you're so positive in the next year for all the fintech apps. And here I'd like to ask Gege, as the CEO of EBO, I'm sure that you have a lot of experience in the way that AI can help the financial industry. So I'd like to have your view on how AI can help financial advisors perform better in the future.
With pleasure, and perhaps I'll start by taking a line out of Andreas's conclusion. I believe that artificial intelligence is there not to replace human agency or human capability, but to augment it. In other words, to create new social goods and social benefits that help us thrive as a society. And the moment you frame AI as an enabler rather than a threat, the entire business landscape changes. And so to your question, Fotis, specifically, relating to how AI can entirely enable or re-enable the financial services and fintech sector to increase. Well, what we've seen in our operations, principally in the UK, but also through Northern and Central Europe, is that AI typically provides three very critical benefits. The first one is automation. So we've seen a lot of efficiency improvements done simply because certain processes, often done by human, are prone to error, fatigue, and as we know through a pandemic, often burnout, right? So when you automate those processes, you create a new level of capability that before that the organization did not have. And through machine learning, AI is continuously learning how to perform tasks better and better over time. So here there is a similarity to the way that we develop as humans, right? Cognitively, we become better over time. The second key advantage that AI provides in the industry is consistency. The idea of following a work or rule pattern within parameters, but it also talks to these key concepts of precision, right? Consistency, effective reporting, both to the regulator and the consumer, and internally to the organization. And this is critical, Fotis, because in an era where you have so much compliance obligations, consistency and efficiency do not simply become a matter of competitiveness, but they become a matter of survival, at least on a legal basis. And I think the third key advantage that I'll speak of today is when AI provides that level of speed, right, in processing, which prevents risk. So with the ability that AI has to aggregate massive libraries of information, of data points, AI can typically very quickly answer questions, problems, requirements that otherwise would require very time and labor intensive activity. Now, when you introduce an enabler like that into your business, you create so many opportunities to reduce risk that, for example, in the financial services sector, where you have so many transactions, users can typically ask or query or verify a transaction and see whether it is compliant even before execution, because we can, predict what the likely outcome is by modeling it. And that avoids a lot of non-compliance issues which exist in the world without AI. So this is an area where fintech workers are breathless. They're trying to keep up pace with regulation. There are so many requirements for efficiency. And so it's so lovely to see that artificial intelligence can be a catalyst, a positive change in an industry that's ready for it.
So speed, consistency, and automation is all what AI is about as benefits. And I'm sure Victor is a lot for automation. So Victor, my question to you is, we're all trying to find ways to save money and invest them in the best possible way, which is actually not that easy at all. So I was wondering, how can fintech help the current and the future generations to save money in a better way and start investing them better and safer?
Yeah, no, I think I think the point where we're reaching right now is how can, call it fintech, or how can applications and experiences help people in a way change their behavior, or maintain a positive behavior, right? So I don't think the problem that we're solving is, I guess with fintech, one thing that you typically solve is cost, right? You make things cheaper, right? Because you're more efficient. You can give more access to more people, right? So you can make, let's say, trading, obviously a lot's been talked about there, that people can now trade where they couldn't. But once you solve the problems of cost and access, you need to solve the behavioral kind of change, or kind of the persistence. So for us, the belief, the way we've built the product is very much driven by how can I change the behavior of someone to have more money, because we don't believe that humans are wired to think very long-term and manage their money very long-term. So I think we're trying to do the boring stuff that you should do in the background, in a way, but we're also forcing you to do things, or things are happening in your bank account that you can reverse, so they're not permanent. So we save money for you every week in small amounts, so you don't notice it, right? And if you want, you can pull that money back and do something with it. But I think the fact that that's happening is positive, and the fact that you can, with very little access, decide where to invest that in things that you acknowledge, and then that becomes a continuous process, right? But I really think that where the focus is now for fintechs, or at least for us, they are very consumer focused, is how can we build something that actually helps the individual and not just give them the tools that are completely like self-serve, right? So I think that's where, and that's why we believe that, like, I believe technology's role is to bring efficiency into the system. So the same way that, like, the previous company I was at, TransferWise, managed to make payments, like, I don't know, 10 times cheaper than what banks do, right? We want to make people's money, like, let's say 10 times more efficient than them managing it on their own. And the way to do that is that they, you know, they sign up to something like Plum, and then things start happening that are positive for them. So I think that's where, at least consumer fintech, I think that's the direction of travel of consumer fintech, how to, like, actually bring better outcomes to people, not just give access and cheaper products to them.
Yeah, great to see, Victor, how you're helping the individual to benefit from, you know, the latest fintech solutions and invest better in an automated way, which is actually the question I wanted to do to Victoria for further elaboration. So Victoria, there is a hype about fintech. We listen about, you know, all these amazing new services, DeFi, blockchain, crypto, neobanks, etc. And at the end of the story, the customer asks himself, what's in it for me? So what do you think we should expect as customers from the new fintech services versus the traditional financial institutions?
Thank you, Foti. When you hinted as well, you know, that we are going to, you know, touch upon this, I found myself, you know, thinking from the position of a demanding customer, let's say that I am, that is actually keen to see more, you know, fintech products available in Cyprus, and us being able to plug into, you know, the existing solutions kind of being offered, a whole range of those. And I think, you know, we live currently in a world where actually digital banking is a necessity, and we need to be able to access it with transparent costs, lean costs, as Victor mentioned, and have a whole host of services offered to us. I guess, you know, the key difference is, you know, that we see fintechs actually addressing the customer experience, and wanting to offer a whole, you know, range of products digitally, whereas, you know, we have traditional banks a little bit burdened still with regulation and turning into regtechs, if I may say so. So the playing field in between the two is still not, call it the same, because fintechs are still regarded as technology companies unless they actually apply for a banking license, and then they come above the radar and with the increased regulatory requirements. So what I would say is that we are definitely in interesting, you know, setting. We see that, you know, fintechs have been on the rise in Europe in terms of, you know, the funding that they have collected, in terms of the exits, in terms of, you know, the crazy valuations. What we can as customers expect is that, let's say, we would increase the offering in Cyprus. I noted actually the minister was talking about improving the play field, the more sophisticated service, also upskilling. I would also like to state that we would actually need to increase the financial literacy of our people to be able to effectively, efficiently use the fintech products on offer. I will give you an interesting statistics. Actually, data was saying that actually women and elderly are not so common to use fintech products, which is, you know, quite a disadvantage. I believe that, you know, they should be accessible also to elderly, provided they have some additional training, and that women as well should be, you know, feeling open to it. But to sum it up, I would love to see a coexistence between fintechs and traditional banks. Both are needed, you know, like to collaborate. I believe that both can build very interesting marketplaces, and I think this is the way, you know, like where, you know, fintechs are heading. They're actually going to provide two-sided marketplaces, so that, you know, the larger fintechs will basically be able to offer you and lending and, you know, like loans, you know, mortgages, and, you know, wealth tech, you know, like products, i.e. managing your investment portfolios, providing you pensions, insurances. So, you know, we want to access those marketplaces through fintech. I hope that round it up.
Yeah, great to see that you see a future for both parts of the world coexisting, and we'll see who will grab the biggest market share, depending, of course, on how they tackle the customers' needs.
Absolutely.
Thank you, Victoria. And I'm on to Andrew now. So Andrew, you have a great background in big data and helping investors take decisions using actually big data. And I'd like to ask you, how does this work? And if you think that fintech solutions can start reading and using big data in a more meaningful way in the future.
Yeah, thank you. So let me give you an analogy. When I first started my first investment, I think in the early 1990s, I used to read the newspaper, and I'd read the FT in London, and there was an article on British Telecom, and then I would go and invest. Nowadays, we're investing in Apple. You might be reading what the CEO is saying in California, but at the same time, there's a factory fire in Shenzhen where they're making key components. And that investor's got to be able to understand in Chinese what's happening in China at the same time as reading what's happening in California. And that's just impossible. And if I go back to what Gege was saying earlier, what we're involved in is enabling investors. We've got something called infobesity, where there's huge amounts of information coming out from different sources in different languages. And what we use is something called NLP, natural language to turn text from text to numbers. And we have a partnership with Dow Jones and the Wall Street Journal, and we can go back 20 years and we can look at sentences that were published in the 1990s and look at how those sentences are similar to sentences that are coming out today, and look at how they affect your stock prices 20 years ago. And that's how we enable investors. We can look at it in different languages. We can learn what this means for an investment and use it for today's investment. So how can this be used in financial applications? It can be used in risk. We can look at trading, which we've already done, image recognition. I was just loading my expenses earlier on, and I took a picture of a receipt, and then that receipt recognized the company, that image recognized the company that was in the receipt, and then it can automatically put that data into the application and file my expenses. We can look at law enforcement. So online, we can look at how many, every time I go online and apply my password, it tells me how many times my password has been mentioned in nefarious places on the web. So all these data points get used across different applications, and it's really interesting. But to get back to the point, it's all about enabling people in an age where data is huge.
Yeah, very interesting, and especially in NLP and AI, we also have a Greek company which does great, which is Omilia, and there is also another regional player in the RPA, the robotic process automation that you mentioned, with invoice processing and recognizing invoices, which is coming from Romania, which is UiPath. Both great partners of ours. Pretty interesting stories, both. And thank you, Andrew, for your input on that. Yiannis, we see a lot of neobanks. Okay, we see number 26, Revolut, which is becoming very popular, I think, also in Cyprus, and they gain a lot of traction. So, do you think that neobanks are more successful than the traditional banking system? Do they serve the customers in a better way? Yes or no, and why?
Okay, very good question. And the answer will be yes. Yes, of course. And I would like to, it's a very, very good chance, and I hope also the audience appreciate that we have an ex-team member of TransferWise, which in my opinion, was the pioneer into the new banking and the online banking. Victor is here. And because it happened back, also I was a customer, a very good customer or TransferWise because it suited my needs, transferring a big amount of money on a good exchange when I used to be in UK. So that's, we can see how I was a customer of the traditional banks, and I used back in 2015, TransferWise to transfer money. Here is the question to answer to Victoria, whether the old traditional banks, she would like to see the old traditional banks collaborate with the new banks. Is that possible? I think it's up to their culture, because I have faced many problems transferring money from TransferWise actually to my bank, saying that we don't recognize this bank, and because it was registered in Estonia, and we all know. And then I say, how can you not recognize such a bank? It was $1 billion company back then in 2016. So I think you have a big trouble not accepting money through TransferWise, and you should read and study more. So the collaboration is based more of the culture of the traditional banking, willing to step up, willing to change, willing to be open-minded to finding new solutions. It cannot be done just from one day to another. They need to trust. They need to be able to understand how things work in a new ways, not the way they know. So, and also we need to remember that fintech is not just banking. There's other services like crowdfunding platform, like donation-based driven concept, peer-to-peer lending, wealth management. So we see even now insurance is getting more digitalized. So we see more and more fintech service, which in my way, if you study them, most of them, so sooner or later, we will not need there won't be any need of banking, any banking or any banks, traditional banks, to transfer money. And so we will be saving a lot on fees, on the high fees. And that's, in my personal opinion, that's the game changer. Because now the one big mistake, especially in Cyprus, but you can see the same thing happening around the world, is the high fees, which I think is if not the most important, but a huge factor why people transferring into the new neobanks or into the more online. Nonetheless, also they have a better user experience, more simplified. They have access and integration to other fintech apps. They have open APIs for other web apps to be used, and other features. They use, some of them they use blockchain, smart contracts. There's also the personalization. So I think that's just the beginning of neobanks, and they haven't even tapped into trillion and trillion dollar markets, which we will see happening, or is starting to happen in the very, very recent years, and especially with COVID. We have been seeing the big transfer of also users. Now they understand the value because they were pushed to more online services as well.
Thank you, Yiannis. I'll go with another round of questions, and we have a lot of questions coming from our friends online. So I'll try to give it another maybe 10 minutes for our replies, and then go into the questions from the audience. So Andrea, in a nutshell, what fintech will bring to us this year, as a whole and as new experiences, and what should we expect?
We should expect many more new features that it will help the consumers with their everyday life. Your life will become much easier. Fintech will, of course, dominate one more year. It will be everywhere. As Yiannis said, traditional banks will have to transform. They have to catch up, copy, or merge and acquire neobanks. Trading and e-commerce has shown the way. You need to digitalize as much services as you can, including insurance, as Yiannis mentioned. And we think there is a big gap in the market in financial advice. A lot of people will seek for a friend or family to ask them what stock to buy, which crypto coin to buy. And this is something that must be developed from financial experts and fintech experts to create a good solution and education tools that will help people to invest their money. And as our friend said, autonomous finance with Plum, we will get more used, and virtual assistants as well. And we believe smart contracts will be something very popular in 2021. And we also see some regulation on it. Thank you.
Thank you, Andrea. Smart contracts for Zoom, especially I think on Ethereum, will be a hot topic for the next couple of years. Next question is for Gege. So Gege, I always order food online because I don't want to talk to anybody for my food, while my wife always picks up the phone because she hates online. She wants to speak with a real human. So both flavors there. So I'd like to ask you if you think that customers will adopt the AI-driven assistance rather than human service in the future.
Well, I think you're touching on a point which Victor made in his input just a couple of minutes ago. And your question is not only about artificial intelligence, Fotis, your question is really about the adoption of technology. So the answer must focus on changing behaviors, changing culture. I think the future of most work processes that we know will be a mix of artificial intelligence and human collaboration. So AI won't replace entire roles, entire jobs, but it will increasingly automate more and more tasks within those traditional roles. What I tend to find is that customers will only adopt artificial intelligence or general technology advancement if there are key drivers, if there are key direct benefits. And perhaps I'll share a story here, Fotis, of an article that Forbes wrote about us at EBO. They researched the UK market and found that in the public healthcare sector in which we operate, 3/4, that's 76% of the British population, was more than happy to interact with an artificial intelligence tool, a virtual agent, rather than a human agent. And what I find spectacular about this research piece is that it's demonstrating that inflection point, right? That moment where there is a shift in culture, where we're starting to understand that convenience and speed, and clearly we live in a society of instant gratification, right? Where things move faster and faster, that these are paramount considerations in the way we do business. So AI is more relevant where it can directly improve service. So if AI can interpret the intent behind your request for food or for a fintech service, if it can be quicker and more efficient to serve and to fulfill rather than a human agent, then it will always be the default selection. So for most queries that we see in general customer service across most of the industries, AI actually can provide that. So to conclude, Fotis, I'll say we need to be very careful at understanding what are the business and societal drivers for adoption, for the change of culture, for nudging the behavior, right? And in my view, those are three. The availability of the tool. So when you have an AI product, which is available 24/7, it's instant with no queue, with higher level of accuracy, that level of availability creates a driver, creates a lever. The second one is convenience. The facility with which a citizen can adopt that particular tool. In our case, in the healthcare space, we are enabling patients to interact with their hospitals through very convenient messaging apps like WhatsApp, Facebook Messenger, and so on, which is an entire culture shift from waiting in a queue for 4 hours or a telephone queue for 1 hour, or even worse, trying to find a fax machine from which to interact. And the third lever and the third driver over here, Fotis, is customer experience. I believe there is a huge differentiator, especially in the fintech space, for companies to become better at leveraging those digital touch points with the customer, making it faster, more convenient, and ultimately more fun.
Thank you, Gege. Thank you for your reply. And let me mix the next question to Victor with the one I was prepared to ask with a question coming from the audience. So, Victor, I want to ask you whether all the investments in the future you think will be automated without, a need for manual intervention from us, and mix it with a question from the audience that says the following: that at the moment one can have his funds or her funds on a blockchain exchange, so I don't know, BlockFi maybe, and get 5-6% per year yield. And why should somebody choose Plum to invest these funds? So a mix of both, about automated and what's in it for somebody to use Plum.
Yeah, I think to the first question, I don't think the point is that automation has to decide where you invest your money. I think that the real key of automation is to make sure that you are putting money aside towards investments. So the key is that money is flowing to investments. How you choose to invest, I think, is more of a decision of your own as to, like, do you want to take an active view or non-active view? But I think it is interesting, like, even if you say, okay, I'm going to do it all myself, you will fail, I think. Like, I look at myself and I fail because things get ahead of you. You get scared when the markets are high. You get scared when they're down. Like, so I think, as I said earlier, like, what we're trying to do is automate the habit of putting money into investments, not necessarily say that we have some algorithm that can choose better where you can invest your money, right? With regards to the second question around the interest that you can receive on various blockchain kind of like platforms, right? I think it's a good, it's an option, right? I think with these things, you need to understand what your risk is, right? So is there counterparty risk? Where is the risk in those products, right? Any product that typically goes up like in a straight line 5% every year, at some point there's a big drop. Not all, I'm not saying always, but like, I think these are, I know what's going on with those things, that you're lending your money to other people that are leveraged, etc., right? I haven't played through the whole the whole thing, but there is some risk there that is not hidden, but you just need to think through it, right? What happens if that entity that you've given the money goes bust, etc.? It's more like counterparty risks. We will introduce, we're not biased for or against these things, right? In due time, we might introduce such alternatives, right? Yeah, and people can choose, right? It's an undefined sector, that one. It's interesting. But yeah, we want to bring good options for people to invest and kind of automate the continuous investing, and not really say, hey, put your money in this or that, right? Yeah, that's not our job.
It's pretty clear, Victor. And this brings me to the question for Victoria, that Victoria, as a retail investor, if I want to participate and invest in fintech startups, it's pretty tough because I need to have a very big amount of cash, maybe $500,000, to participate in a VC that invests in fintech startups. So as a retail investor, I'm usually left out. Do you think this is going to change? And how can us, the retail investors, tap into the fintech opportunity? Maybe with the help of early stage VC funds that will be accepting us at some point.
Foti, this is a great question, and I think we looking at this past 11 months, we see that fintech has the scene set for it to thrive, and there will be interest from retail investors, absolutely. But we need to remember first and foremost that startups and thus fintechs are a highly risky asset class. Therefore, that's why it is even recommended that retail investors should sort of check their balances and see that they're ready to lose money. Now, I have to say that, the traditional avenues of actually going into, investing has been through, family offices, high net worth individuals, through their wealth managers, and so on. They have been able to tap into the fintech opportunity. There are only about 8%, I think, of the total funding that went from the VC funds to fintech has been in the early stage ventures. So we have to be aware that, the VC funds typically step in from Series A onwards. There are some that are looking to enter, to complete the seed rounds, with the true metrics that they need, with the quality of the team, with the true diversification, towards the competition, because this is what, they're looking to back those with a differentiated proposition. And I think this will be also the case in the future. Now, the retail investors always have the equity crowdfunding platforms, to be able to, invest even from £10. We know that UK has been, seeing tremendous growth of Crowdcube, of Seeders. They're actually even looking to merge. I think I even saw Crowdcube as the top, 10 investor into the UK fintech scene. So you can see that a lot of fintechs, raise money on Crowdcube backed by retail investors. And I would definitely encourage those looking to get a piece of the action to actually participate through crowdfunding platforms. I think actually Andreas is working on something similar for Cyprus. I'm looking forward to see that develop. Therefore, I believe that one interesting trend that we can see from VC funds is that actually they would take on retail investors with good, obviously, network and financial literacy, and appoint them to wear their angel hats. Now, this is a very interesting moment. I saw Atomico is doing that. Backed VCs appoint scouts as well. Some form of angel hats, going and scouting for early stage ventures to back. So that's an avenue that is of interest to me, because I believe maybe I built some knowledge, and kind of competence as a network in that field. But I believe that those who seek will find and will be able to build their skills, their gut feel, by even starting to invest small, whatever they can risk, because still I would like to underline it's a highly, highly risky business.
Thank you.
And just Fotis, I just wanted to mention to Yiannis on that point that he mentioned earlier. Yiannis, in the last 24 hours, I tried to transact through a fintech. It failed me. It sent me a virtual assistant that did not serve me, and the traditional bank did something for me within an hour. So I have to say that to just underline, sometimes it's nice to actually turn to the bank. Especially those banks that are adapting, they're able to pick on what the customers are doing. And another thing, fintechs are still able to see the average deposit on the Revolut, I think, was €250 only. When the fintechs are able to encourage also people to keep their money with them, I think this is what it's going to be an interesting moment. So something to follow in those avenues, fintechs and the banks, coexisting and trying to adapt to work with each other.
Thank you, Victoria. A couple of more questions for Andrew and Yiannis, as the time seems to be short. Andrew, I also want to combine a question of mine with a question coming from the audience, because you told me that you have experience on that. So my question would be about data analytics and their role in the future fintech apps. And the question from the audience is about ESG and the whole environmental and socially responsible motion, and how it can connect with fintech in the future.
Okay. Well, first of all, going on from what I was saying earlier, data is knowledge, essentially, and we need knowledge for all decisions we make, whether we're trading or whether we're opening an account or whatever it may be. But analyzing that data is key. So let me tell you a story. A typical hedge fund manager 10 years ago would say to his quant analysts, hey, tell me the relationship between Colombian coal prices and, say, Russian gas prices, and which is preceding the other. And then the quant would go away. 4 weeks later, he would come back and say, look, I've analyzed all the pricing data, and I've come back, and here's my decision. It's really good it's a great investment decision. Then off we go and invest some money. But nowadays, someone can just say to a Google and say, "Hey Google, just tell me the relationship between Colombian coal prices and Russian gas prices," and off you go and invest. So the power of computing has enabled that, but also the democratization of access to data is allowing that. And we will see that through apps. And the key thing with apps is, in my mind, is the visualization. So we have this huge amounts of data out there in the world, especially on the World Wide Web. And how do we condense all that information into simple information that allows the user to understand what is happening in the world and allow him to make more informed decisions, and whether that could be opening a bank account or it could be trading or wherever it may be. Now, in terms of ESG, I'm going to answer the question, or I'm going to talk about how data is affecting ESG, and also give a real life example on something very similar. Companies have been using pricing data numbers for years to analyze data and to analyze investments. And we take the example of Moody's or S&P. They've been rating companies' debt for many, many years. But recently, Moody's just bought a company called Naviga, I think it was called, which is a news-based company, and it aggregates lots of information. And the idea behind it is that they're now going to use text to create events and measure events that have happened all the way back 20, 30 years in news, to say, right, this company, Santander, based in Madrid, X event happened with its shareholders, which would have affected its debt. And we'll put a red mark against that one. And they can do that automatically using text, turning text into data, and then evaluating their debt or whatever it may be, going back 20, 30, or however many years, and then creating a score that is live that investors can use to understand their debt. Now flip that to ESG, it's the same as well. Essentially with ESG, environmental, social, and governance, we're looking at companies and how they're reported independently across the world, especially, for example, companies that are in China or under oppressive regimes where things, social norms might not be happening, or environmental for oil firms. There's a lot of talk about European oil firms coming away from oil, going into more environmentally friendly forms of electricity. Now, what text and data can do is we can see huge amounts of data, huge amounts of text on the internet, opinions and thoughts, and we can start marking these companies for their ESG based on the stories on the FT or the Wall Street Journal or Reuters, Bloomberg, and saying, well, how is BP, British Petroleum, being reported in the news for the last 20 years? And are they what we call environmentally washing? That's to say, are they actually saying, yeah, we're really environmentally friendly, but actually, if we look at the real reporting underneath it all, they're not doing any ESG good stuff at all. They're actually continuing to invest in oil. They're continuing to oppress the text. Can actually give us a lot of information. It can tell us what the company is trying to say in an ESG environment and what it's actually doing. And then we can turn that text into numbers and rate that company as to whether it's a good ESG investment. And what we're seeing today, I think, was it yesterday? BlackRock, the leader of BlackRock, the chairman or the CEO, said that all his companies now have to take account of ESG when they're making decisions. And so all these companies and all these investors and such forth are now actually having to think, okay, when we put out public statements, we've got to say, yeah, we're focusing on ESG. But actually, the computers that I'm working on will actually be able to tell you whether that chairman is actually telling the truth and whether he's actually doing ESG properly. And then that will report back to the head of these investors like BlackRock, who will actually say, well, thank you, but you're making the effort, but you're not really making the effort. So there's a lot of movement in ESG in terms of data and how it's applied. I don't know if that helps you towards what you were looking for.
Yeah, for sure, Andrew. This is
Thank you so
very
much.
helpful.
I'm sorry to interrupt, for this is a very amazing discussion, and thank you, but we are quite out of time. So
thank you, Antonia. Thank you, Yiannis. I'm sorry I didn't have time for the last question I had for you, but I'm sure we'll have the time to send it. And many thanks to the audience for all the questions. Tried to place a couple of them inside the discussion. So Victor, Gege, Victoria, Andreas, Andrew, and Yiannis, thank you a lot for the discussion.
Great panel.
Thanks, everyone.
Thank you. I wanted to answer because I see us on the question, but I will type the answers. And thank you, everyone, for the great discussion. Thank you.
Thank you, Antonia. The floor is yours.
Thank you so much for this. Thank you so much. Thank you,
Bye, everyone. Thank you.
Amazing discussion. Thank you, Victoria. Thank you, everyone.